All right, so here we have the 5-4 work together. So in this one, we're going to be working with petty cash. So the amount of money that is kept in an office for minor miscellaneous expenses that need to be for things that need to be purchased right away or to reimburse employees for something that had to be purchased. So we're going to do a replenishing the petty cash fund. And then in step 2, we're going to journalize the petty cash for the record keeping. So start the directions. Prepare petty cash report for November 30th for the current year using the following information. The amount in the fund is $200. So that's the amount that started at the beginning of the month with in the petty cash in the office. Petty cash slips supported a payment of $24 for postage and $20 for miscellaneous expense. Actual amount of cash in the petty cash is $154. So when the money's counted, there's only $154 in there after money was paid out for those receipts. So use November 30th of the current year as the date. Each student's signature, enter student's signature in cells where you would enter the custodian's signature. So the custodian would be the person that's in charge of the petty cash. They have custody of the petty cash. So let's start with the date. November 30th. The custodian of the account, student's signature. So don't actually put your name in there. You have to literally just put the word student signature in there. So the fund total says up here, amount in fund, $200. So at the beginning of the month, petty cash should have $200 in it. Then it said somebody spent $24 on postage. So somebody in the office had to go to the post office and buy some stamps or mail something that cost $24 and came back and got reimbursed for it with the receipt. And then $20 for some kind of miscellaneous expense. So let's click on our drop-down menu, our top one, postage expense, $24. And the next one, miscellaneous expense, $20. Maybe it was somebody's birthday and they went and bought cupcakes or something. So those are the two expenses that were taken out of petty cash for the month. So now we've got total payments. So the total of those are $44. And you can see this arrow here. So that just means to also enter $44 in this next box because that has to be replenished at the beginning of the next month, at the beginning of December, to replenish that amount to get back up to the $200. Okay, now it says, we've got it here, less the total payments. So we've got the fund total of $200 less total payments, meaning we're going to subtract those. So $200 less or minus the $44 equals $156. So that's the recorded amount on hand. So on paper, that's the amount that should be in petty cash, $156. But when petty cash was counted, it says up here in the directions, the actual amount of cash in the petty cash box was $154. So 154. So now we're going to subtract that amount from what we should have. So 156 minus 154 is $2. Notice it says short or over. So in this case, we're short $2. So it's bringing this down to also this box. So if we were over, if there was more money in there than what was supposed to be there, then we'd be subtracting. So we wouldn't need to be replenishing the full 44. But since there's less, we need to add that on there too, because we need to add another $2 so we can get back up to the total of 200. So 44 plus 2, $46. So that's how much money needs to replenish in petty cash at the beginning of December to get the total back up to $200. Or if it's every 2 months, maybe beginning of January, which in this case, that would be end of year and they'd be closing it out. That'd be a whole other thing. But anyway, month to month, $46 to replenish up to 200. So let's get to the next step. And now we're going to journalize the petty cash and the expenses. So journalize the transactions related to petty cash completed during November of the current year. Use page 22 of the journal. The abbreviation for check is C, check. Our journal's already marked there, so we'll put in here on the first date, November 1. Petty cash for the petty cash account. Document number. C. For check. C64. Transactions. So paid cash for petty cash in the fund, C64, now 30th, paid cash to replenish petty cash, $46. Okay, so we've got to put in these others. So the 30th, we had a postage expense. Remember, all these have to go in their own accounts in the ledgers. Postage expense. Then we had a miscellaneous expense. And then we had that shortage, cash shortage that's short or over. So we'll put in cash, short, and over. So the postage expense, all right, start with petty cash first. So petty cash, it's an asset, so there's an increase in the asset, $200. That came out of the checking account. So a decrease in the cash asset in the checking account, so $200 credit. And then the expenses, or those on the owner's equity side of the accounting equation. So those decrease from that owner's equity. So on that side, the decreases go as a debit entry. So postage was $24. Miscellaneous was $20. Then we had that cash short and over, and it was short $2, so $2 goes there. But if we click on this tab up here again at the transactions, you notice that paid cash to replace the petty cash fund, $46, check 86. So all three of those, of course, are going to be written on one check. So that's check 86. So we'll put C 86. And we didn't need to put the date in for these other two items because they're included in this whole transaction on one check. And that check was for $46. Which was up here, and it's what all three of these expenses come out to be, $46. So that is the 5-4 work together.